Welcome to the second video in my series. In the first video, I did explaining candlesticks, their types, the psychology behind it, the formation, and the name. On today's video, I will be explaining trend lines. So if you zoom in on any chart, or if you just display any chart, here I'm using TradingView. It's just a platform where you analyze your trades. And for this plot, I'm showing USD against JPY, and it's in the 1 hour time frame. So usually if you display a chart, the signal appears this way. You don't just have stuff going up forever, you don't have stuff coming down forever, you don't have stuff being so flat, but you have these sort of behaviors. And today I will be explaining this sort of behavior. The first will be an uptrend, the second will be a downtrend, and the last will be a consolidation. So when we have an uptrend, if you've already done some science work, you already know that when you have an initial point or original point and there is some evolution, so there's some change in time, and your signal progress upward or does not return to where it started, or there's an overall drift in an upward fashion, then we say there's an uptrend. On the contrary, if it goes down, we say there is a downtrend. So I'm going to zoom in here a little bit and explain that. It still kind of like applies here, it's the same. And towards the end, I will be showing you how you could use this to make money. So let's zoom in there and let's start with the downtrend. So starting with this pin, we see this sort of motion that bounces around, and after a while we sort of like see a sharp fall in price, and then it went up and then fall again. If you don't want to focus on the candlesticks, you could also focus on the line that I fitted in between, which is some moving average. And so we see a fall, we see a rise, we see a fall, we see a rise, we see a fall, another rise and fall. And the same thing applies to this side. Here we see an increase, a drop, an increase, a drop, an increase, a drop, drop, an increase. And so this sort of motion, we call it a downtrend. So it's going down and it's sort of like trending down. And here it's going up and sort of like trending up. So this downtrend and this is an uptrend. We know this by the lower lows and lower highs for the downtrend. So basically you have a lower low. So this is low, lower compared to this initial point, and then you have a lower high. So it's low, but it's low compared to this, but it's higher compared to this. So this is a lower high. The same applies to this. So again, you have a lower low and a lower high. So this sort of formation, we call it downtrend. And when it reverses and becomes a higher highs and a higher low, then we call this an uptrend. So basically it's going up overall. I believe that was simple enough and you're able to grasp that. If you couldn't grasp what I just said, please ask your questions in the comment section and I'll try to answer them. I'll refer you to some resources. And also there's also another one. So there are some time, maybe most of the time when the market has done like a really high motion, or like there's a really high gap in the market, or there's like a great distance travel in the market, then the market tries to consolidate. Basically it stays within some region without changing very much. So if I'm to draw a line, a straight line, if I could put a line there and draw it straight all the way to here, and I'm going to duplicate that line. I'm going to copy that line and paste it down here. We sort of see this flat. So rather than focusing on this tiny uptrend and a lower and a tiny downtrend, we could see some pattern. So it came down, entered this tunnel, and then went, bounced on this line, came up, bounced on this line, came again, bounced on this line, went up, sort of broke a little, but bounced on that line, and then came back and it continued on for a while, and then to break out at some point. This sort of formation is called consolidation. So basically price is consolidating, and usually you see this where you see a very fast or sharp motion in the market. So it's basically trying to find an equilibrium. It's just bouncing around. Don't think of those as dynamics of the market. Okay, now you already have a good idea of the 3 terms I want to explain in this video. I will now show you how you can identify them and how we sort of like utilize this information in our trading. So starting with the uptrend, which we see in this portion of the plot, I'm going to add lines just to guide our eyes. So that's up and this is down. Let me just zoom in a little bit. I think it's a bit hard to see. Zoom in that much, and this is down and this is up. At the end of this video, you should be able to open your chart and see where stops are going up and where stops are going down. It doesn't have to be very neat, but overall you see the pattern. So my lines are purple, they're really bit hard to see. You could change the colors to whatever you want, maybe a yellow. I see it a bit hard to see, but overall you should be able to open your chart and see when stops are going up. So basically that tells you that the market at that point is bullish. So the buyers are in charge of the market, or there are more buyers in the market than the sellers. And when it's coming down, the market says to be bearish. So basically you have more sellers in the market than the buyers. That's one of the stuff you need to have at the back of your mind. If you really want to trade, that's like some of the foundational knowledge that you should have. So let's draw some trend lines. So basically you see a lower point, you draw a line there, and then you target all the lower points for the, like when we're drawing those ladders, these sort of stairs. We were coming to this point I was calling the lower highs. You want to draw a line that touches all of them. So it keeps on going and it broke somewhere there. So for this short trend, we saw this touching here, this touching it, this touching it, and this touching it. This is a trend line, and overall this sort of like tells us stuff are going up because the line has some degree pointing up. Let's copy that same line and place it to the top. So now we'll focus on touching the higher points. Unfortunately, we'll have this like a very tiny portion of the trend, but overall you see stuff touching it. Went, bounced on the line, dropped, bounced on the line, dropped to this one, and went again, came back, and went again and came back. So this sort of like gives us a channel. So this is basically a channel of travel. This is where the price is traveling. So if you have to do short time trades, in fact, if you change from 1 hour to like 30 minutes or 15 minutes, you see this more clearly. But for this particular video, I'm just keeping it there. But I mean, you could zoom in here and see the same thing. If you draw a line here, line touch here, line touch here. So let me just draw that line really quick. It touched that one, and then it goes up somewhere into the future. Let's copy that, paste it, put it to the top. It tells us where the price is bouncing. So like that, we're focusing this point. Usually you want to target at least 3 points. So you should touch like 3 lower points, so 3 wicks. Touch this one, it touch this one, and ideally you want it to touch something else. But when it reached here, instead of bouncing here and going up to the line, it cut off. So that's what we say a break out of the trend. So there's a break out of trend, which is some concept that I also wanted to explain. So basically it went up, down. Instead of going up here, then it broke. So when should you enter the market and when should you exit the market? Just have this knowledge. And in my 8th video, when I was putting all this sort of knowledge information together, we would come up with a very robust strategy. But at this point, I wouldn't give out what you should do or how you should figure out when to stay in the market and when to exit. But just know that usually the motion in the market overall, it's some sort of going up and down and up and down and up and down again. Again, if you have any question, just drop it in the chat, and drop it in the comment section, not the chat, and I'll try my best to answer the questions. So that's all about trend, and I'm going to end the video. There are other tools that you could use, such as the trending angle. Basically, if you draw that, it gives you how stiff the trend is. If it's a bit more flat compared to a bit more high. You want a very steep trend because it's basically telling you the change in price is happening so fast. So there is much pips covered within a short amount of time. So that's the sort of market you want to enter. But I wouldn't be showing you how you apply that in your market at this point. But in my next 6 videos, I'll put them together and then to make sense to you. See you in my next video. Bye.